What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is March 31st of 2022. Well, folks, I hope you are having a fantastic day wherever you are, and in today's video, I want to spend some time to talk about what I feel is the inconvenient truth when it comes to trading cryptocurrencies. Now, as many of you know, if you've been following the channel here, I'm not bearish on crypto. I love cryptocurrencies. It's where I'm most exposed, and I don't think there's going to be any sector that's going to outpace crypto over the next coming years. But as much as I love crypto, there is an unfortunate reality, a reality in which has left many people getting into the industry and not only losing large amounts of money in the process, but potentially losing it all. If you guys ever stay through all of one of my videos, I recommend you stick through this one here. Today, we're going to be talking about the failed concept of active trading and why it is a losing game when it comes to crypto. If there's any lesson you take away from this video, this is the one to take away from it. Now, we do have a really interesting personal update of mine that I want to share with you guys that kind of ties into this, and will also vocalize why I'm so passionate about this. But on top of that as well, we do have a sponsored interview later on with Austin Woodward from TaxBit, where we're going to be learning all about crypto taxes as tax season is rapidly approaching, and also with some details of the TaxBit platform. But that'll come later in the video. Let's go ahead and dive straight into this topic. So first off, why am I so negative on active trading? Well, I'm going to tell you guys firsthand here. I've traded in traditional equities or the stock market. I've traded in Forex markets. I've traded in commodities, and I've also traded here in cryptocurrencies. And I can tell you all, it's not just my experience or just the experience of a select few others. There have been mainstream studies that are written about actively on the web talking about how day trading or swing trading, for that matter, just being an active trader generally is going to leave you losing money. There's a really awesome summary here that Market Insider put together, writing through about some of the key studies that came out. Major Brazilian futures trader study found that 97% of traders lose money over a period of 300 days. Along with that as well, a major Taiwan study that ran for over a decade found that only 5% of traders end up being profitable. That's a great way to say 95% of traders ended up losing money. But on top of that, there's other studies here. The U.S. Securities Exchange Commission, the SEC, on Forex traders found that 70% of traders lose money every quarter on average, and traders typically lose 100% of their money within 12 months. Platforms like eToro found that 80% of people lose money, with the median loss being 36%. This, in my opinion, is an absolute tragedy, because the overall objective of investing or trading is not only to grow your money, but at its base core, it's to hedge yourself against the uncertainties of the world to protect your purchasing power, i.e. inflation. And inflation right now is a clear and present threat in the global economy. We have not seen inflation rates this high since back in the 70s. And as we've talked about here on the channel, unfortunately, as much as I would like to think that inflation is going to end soon, we can turn to history and realize that the last wave of inflation lasted a multitude of years, nearly a decade of heightened inflation that got out of control, out of the hands of the central bank, and harmed the American consumer as well as global consumers abroad. And today I want to go ahead and share what I believe is the initiative towards solving this. What I believe is the way we can knock two birds with one stone. We can build a better experience for people in the cryptocurrency industry to be able to get into crypto the right way, but at the same time as well, help people to hedge against inflation by passively gaining exposure to the cryptocurrency space. Today, I want to share with you all the exciting news that we've just recently launched the Series A round for Digifox, my startup that I self-funded back a couple years ago. And this is going to be focused on allowing people to be able to receive a portion or all of their salary in the form of cryptocurrencies, a feature we call Get Paid in Crypto. And this will allow anyone in the United States, whether you're a W-2 employee or contractor, to be able to receive a portion or all of your salary in the form of crypto, as well as earn interest on it. This is one of the first platforms that's going to bring those two elements together, and that's going to allow users to have a powerful way to be able to gain exposure to crypto over time, which ends up being a winning strategy comparative to active trading. You beat out the market easily over 90-95% of the time, but on top of that as well, not lose this opportunity to passively invest in one of the best performing assets on an annualized basis, while also earning interest on top of it, compounding your returns. And I think that this is an extraordinary opportunity. We've been working on this behind the scenes for nearly a year now, and I'm excited to say that the WeFunder campaign, or our equity crowdfunding, has gone live as of today. We have over $572,000 in investors so far, and the really cool thing about this, as many of you might remember from our previous equity crowdfunding back back in 2020, it allows anyone to invest. You can invest as little as $100, and on top of that as well, you can invest as much as you want. It's a really cool thing that I believe in, as I believe in democratized finance and allowing everyone to participate. And on top of that as well, I want to go ahead and make a few things clear here that I think are important to understand. First off, for those of you out there who have downloaded the DigiFox app back when we were focused more on DeFi rather than get paid in crypto, or supported our previous equity crowdfunding, I want to thank you guys for the support you've shown. Over the last year, we learned a ton in regards to what DigiFox can achieve, and I'm very excited for this next chapter, and it just wouldn't be possible without you guys, for those of you who have been watching the channel and supporting us. And on top of that as well, it's important to note here that when you guys are investing in the WeFunder campaign, you're able to actually get equity or shares in the company. So this isn't like Kickstarter, Indiegogo, where you're just supporting an idea and maybe winning some perks. You're actually going to be able to benefit, hopefully, from the growth of the company, so long as we continue to grow and deliver on our promises. That's the key goal here with DigiFox. And my biggest focus here is to scale out Get Paid in Crypto over the next few years so that we get people into the crypto space the right way, into a winning strategy where they're actually able to hedge against inflation, where they're actually able to get a yield on their assets, passively investing, not stressing. And that's the big thing as well, just to kind of close off this topic of short-term trading here, which is that unfortunately it takes up so much time and so much energy and most of your focus, because you have to be active during the market hours, which are during most of the day. We want to make sure we get people into the crypto sector the right way, where they're not worried about the volatility, they're not worried about the craziness. So if you guys are interested in checking it out, I'm going to leave a link down below in the description. If you guys have wanted to support the channel in some way, I know all of you guys are always constantly liking, leaving comments, you're supporting the channel in so many great ways, and I'm so thankful for it. But if you guys are interested and you want to participate in it, it's open to you guys. And I would love it if you could just share it with family or friends, because we want to have an active community of everyday investors and supporters of the application as we prepare to launch Get Paid in Crypto into the coming weeks here, going into the month of April. We're so excited for this journey, guys, and we hope you'll be a part of it here. Now, the topic here doesn't end in regards to this topic of trading. Another important thing to understand here, and I think a big misconception that people run into, is that when they're investing in the market, they go, okay, Nick, so I understand dollar cost averaging is a great strategy, or effectively in this case, maybe even getting paid in crypto, which is effectively the same. I understand a lot of people might be supportive of this, but the question I have is, why would I just invest in maybe Bitcoin, Ethereum, and Litecoin? And that's a great question. The major point I want to emphasize here again is that all the while, in the case of day trading, yes, maybe you can be a part of that 1 to 5% of people who do make money day trading. Maybe you can be the next Jordan Belfort or Wolf of Wall Street, as people always try to pitch it as this great lavish life that you're just going to make millions overnight. But the reality is that whether or not you're investing in speculative altcoins with your entire portfolio, or investing into the large caps in this case that have time-tested annualized returns that are still way outpacing traditional asset classes like the stock market and commodities, you're going to find yourself with a much higher risk of losing large amounts of money, losing it all, or even worse in this case, I guess not worse than losing it all, but simply lagging behind the safer plays, wasting all this time and all this stress trying to beat out the market. And this has been proven time and time again that it just usually doesn't work. It's very, very rare that you're going to be able to do that. So I'll give a great example of this. You don't have to just take my word for it. Take a look at this chart here. This is Total 2, which is taking the entire market cap of the altcoin sector. It's excluding Bitcoin's market cap, and we're dividing it by Ethereum. You can bring up this ratio in TradingView, take a look for yourself, and this is probably one of the most important charts you could understand when it comes to altcoin investing. Now, is it to say that there wasn't altcoins that did 10x's, 20x's, 100x's against Ethereum over the past couple of years? No. There's definitely some cryptocurrencies out there that did that, but they are far and few. And when we take a look at the grand scheme of things on an index level here, we can see that this ratio has showcased us that as far back as October of 2018, the vast majority of altcoins have underperformed or kept relatively neutral with Ethereum. Now that is very contrary to the past here, back during 2016, 2017, and as we went into the peak back in January of 2018. This trend that we saw in the past is not repeating. At least it's not keeping up as strong as the trend of Ethereum. And we've seen this continue to be the focus point here throughout this market cycle. And that's why I constantly talk about this narrative of not trying to always focus on having your entire portfolio in highly speculative plays that all the while may do well, many of which are probably going to underperform. It would be such a shame, such a wasted opportunity to not partake in this great movement in the crypto space the right way. At least to make sure that you have that safety net where the vast majority is in much more established cryptocurrencies. Now, all the while, I do want to emphasize one thing, and I think we're seeing some really interesting trends here. There is definitely a big rebound as of recent, with the increase in confidence in the market in the DeFi space here against Ethereum, as we take a look at the DeFi Pulse Index against Wrap Ethereum. We can also see here as well, the metaverse space has had a nice pullback here. It looks like it's making new support on previous resistance, and it might start to trend higher against Ethereum. It's not to say that you can't have exposure to these more speculative cryptocurrencies, but if you're more in this case just looking to be able to be in the fastest growing asset class in history and you don't want to risk missing that opportunity, and yes, if you make a couple 100% versus a couple thousands of percentage points, that is life-changing returns for the vast majority of people. I want to go ahead and make that clear, guys. I hate in the space people say, if you really want to make life-changing returns, you can't invest in Bitcoin or Ethereum. And I think that that's totally BS. I'm sorry. I think that's a really wrong take. And I think it shows how greedy we can sometimes get. If we're being a bit self-reflective, and I learned this the hard way many, many times as I went throughout my trading journey, you've got to be real. You have to realize the fact in this case that passive investing, and on top of that as well, having a longer-term time preference is always going to pay off. And I read about this a little bit deeper in our upcoming newsletter that we're going to be dropping on April 1st, April 2nd for the Dash Report. So if you guys are interested, you can check that out. But again, I want to make that point very clear. I think that's something everyone needs to know here, which is that no matter if you're investing in Bitcoin, no matter if you're investing in Ethereum, passive trading simply is passive investing rather than active trading is going to be much better. And I want to go ahead and make one thing here clear, guys. As you guys can see with the launch of the WeFunder campaign for Digifox, launching Get Paid in Crypto here in the near future, we are focused on, and in everything that I do, I want you guys to succeed. I think that it's important to call out that there are a lot of people who are normalizing things like leverage trading, who are basically benefiting from you losing. And to me, that is not only completely immoral, but on top of that as well, I just can't continue to sit passively by and see the next wave of people coming into this space the wrong way. This isn't, for example, I don't know how to put it. I guess this isn't some kind of innovative sector where, if things go wrong, it's okay. It's software, it's early stage. This is people's money. It's finance. It's people's either well-being and growth towards financial freedom, or it's going to be a robbery, a theft of their wealth when they're misled down the wrong path. All right. Now, you guys know this isn't financial advice, of course, but the data is on our side. And that's why I always practice what I preach. And I'm standing by trying to scale this out to the next wave of people. And what's really cool about Get Paid in Crypto is that this used to be an exclusive feature to celebrities and high net worth individuals. We're now democratizing this. We're bringing this opportunity, no matter where you work in the US, to be able to receive a portion of your salary in crypto. And on top of that, we're going to work to bring it to more jurisdictions as time progresses. But we want to make sure we master the experience here before we scale it out and really build the best experience possible for you guys. So as the feature comes live, if you guys want to follow when the feature launches, we'll mention it here on the channel, but also you can follow us on Twitter. But I want to go ahead, let's just go ahead and dive into this conversation here with Austin Woodward from TaxBit, because I think it's just as important now to talk about what's going on in the world of taxes and crypto and prepare for this upcoming tax season. Alrighty, everyone. So in today's sponsored interview, I'm sitting down with a longtime friend in the cryptocurrency space. We've been following Austin on his journey as far back as 2018. He is one of the co-founders of TaxBit, one of the leading platforms in the crypto tax space. Austin, thanks so much for making the time, and I appreciate it.
Absolutely. So great to be here. We're going on year 4 now. Can you believe it?
It's like, I think, dinosaur years when it comes to crypto. It really feels like, a decade ago at least. So yeah. The time flies by, man.
It's incredible. I just for the viewers that have followed us for 4 years, for my story, I was introduced largely a lot of my early education on crypto from the Data Dash show and from Nicholas, and that was in 2017. And so it's crazy how long it's been now and how much has happened since.
A lot has changed, man. The whole space is, I mean, grown multiples in valuation. You guys have had a great success story, Austin. I mean, it's one thing in the crypto space, you see a lot of projects, but you guys have built a really strong titan in the industry when it comes to helping to streamline taxes. And I guess we should go ahead and address the elephant in the room, that taxes are never fun, right? I think we can all agree taxes can be a burden sometimes, but the one thing is that they're important. It is important as well to file not only for your taxes, but to pay things properly. And on top of that, in crypto, even though it can be incredibly cumbersome trying to do it by yourself, there's a lot of great new platforms like the one you've been working on, Austin. And I think you guys from the get-go really saw this issue. So I want to go ahead and just kind of give you some time to talk a little bit about TaxBit as a platform. What is TaxBit, and where did it come from? Where is it now? And why is it important for people who are planning their taxes for this year?
Yeah, it's a great question. And really the story started about 4.5 years ago now, when I'm a CPA. So I'm a tax nerd. We're going to keep this fun, but I'm sure everyone's favorite guest to have on. Cryptocurrency, Satoshi or someone back in the day, they actually got the name wrong. It's not cryptocurrency, it's crypto property. That's not just in the eyes of the IRS. That's 90% of world's tax authorities as well. And so what that means, never in our society have we had this underlying asset class that has a cost basis notion assigned to it. And so being able to track your cost basis, or cost basis is synonymous with original obtainment value or purchase price, across all the different things that you can do with this asset. Unlike equities, it's not just buy, hold, sell. There is now so many other use cases. There's decentralized finance. There is now staking and interest-bearing accounts and forks and airdrops, peer-to-peer transfers, point of currency vehicle. And so our society is like, whoa, we have this asset class that we have to track things upon every single movement across the ecosystem for all these use cases. And that's not happened in society before. And so TaxBit came into existence to go and solve that tax and accounting tracking and reporting problem at scale. And so we have a do-it-yourself B2C product. It's actually free. That's a new development of this year. We formed what's called this TaxBit network and partnered with many dozens of the leading exchanges and even decentralized protocols that they're essentially, providing this value to you for free. And so you can go on and link all your exchange accounts and see all of your data come in a normalized fashion. We run the tax calculations on that data and then output your ready to go tax forms that are importable into popular tax filing software over to an accountant on the back end. So that's where we started. That's still one of, a key flagship products that we have today. But where we've gone in the last 4 years is actually really up market, where we are used by many of the leading exchanges platforms, labeled API provider, to provide much of the same functionality that exists within our consumer product natively within the broker's application. So I'll do kind of this is a Venmo app, right? You can see this total return position that updates every 3 seconds. And you can drill into, your assets and see cost basis, portfolio performance over time. A lot of these developers are building applications such as Venmo and PayPal on top of TaxBit's API. So that's just kind of a quick demo. And so really our goal is we want to provide everyday crypto users with the tools natively within the applications that they're already using on a day-to-day basis. That way tax accounting is streamlined throughout the year and you can see where you're at real time. So that's where we've come, Nick, in the last 4 years. And we're really fortunate now to have a leading team, dozens of CPAs and attorneys. We've crossed over 200 people and we're growing to 400, 500 plus this year.
That's incredible, Austin. I mean, seriously, congrats on first the success story that you guys have. But on that point, you mentioned earlier, I think you even mentioned one label earlier on some of the things that make up the crypto space. There's even NFTs as well. I think you might have said it. I mean, there's and I saw that TaxBit has a beta for that now. So I want to kick off this thing because as you mentioned, man, we're going through, sometimes people are thinking, oh, crypto's not moving fast enough. It's moving incredibly fast as a sector comparative to anything we've seen in finance before.
Faster than the adoption of the internet.
Yeah, exactly. Yeah, on the user base, that's very true. Yeah, I mean, we're still, and the crazy thing to think about is we're still in I think, on a macro level, we're in the 1990s still. We're still in the early days for crypto as an asset class, and it's just going to keep on getting bigger. So on that point, with all those different areas that we have within the crypto sector, there are different types of taxes that we have to be concerned about. I think predominantly, as you mentioned, as most of crypto is seen as property, we have capital gains and capital losses. And I do want to dive into that as we go through the conversation. And there's also the topic of miscellaneous income. So maybe we can dive into these two areas, and then maybe maybe any other tax areas I might have missed and stuff. But those are usually the two big ones, from my understanding.
Those are the two big ones. You're right on. So let's start with capital gains and losses. This is essentially the purchase price of when you obtain something compared to the disposal value, or what the value of when you disposed of it. And we're using these weird terms on purpose, Nick, where it's disposal as opposed to sell, because I think the word sell oftentimes gets misconceived with I went back to fiat currency. That absolutely is one use case of a disposal, but the IRS's viewpoint, as well as most countries around the world, is that there's actually multiple types of disposals. If you are swapping one coin for another, Bitcoin for Ethereum, that's also a disposal event that you have a measurement and a taxable event associated with it. If you pay for a good or service with crypto or a crypto-backed debit card, that's also a disposal event. And so there's many types of disposal events, but essentially the concept is you measure the value at the time of disposal compared to the time when you obtained it, and there's either a gain, an appreciation, or a loss, a depreciation in value there that's reported on your taxes. The next class, and we'll dive deeper here, Nick, but the income. I'm really glad that you pointed this out. There has been a rise. I think when we first started in 2018 on this show, we weren't talking about income at all.
Yeah, it was such a small amount, right? Like, and it was so confusing, right?
Yes, yeah. I think there was the mining use case, which was very like small. Other than that, there wasn't like staking and interest-bearing accounts and referral bonuses paid out in crypto and airdrops that are prevalent. All of these things, like any net new acquisition of crypto that you didn't pay for, but you provided a service or you provided assets as collateral to obtain new crypto, the IRS views that as income, as well as most countries. Of course, there is, nuances country by country, but most also view it the same way, where essentially the market value at the time of receipt of this net new crypto you obtained is reported as other income on your tax return. And so it's important that you have solid records that are, pegging the value appropriately and categorizing these events appropriately, so that way your tax forms are accurate and ready to go.
Very cool, man. Yeah, I think you brought it up, Austin, that this topic of miscellaneous income, or as you mentioned, just general income in the crypto space, with yield generating platforms like Celsius or BlockFi, any kind of thing, like you get referrals. This is a really important thing to think about, guys. And it's important to consider those, especially once you get over, I don't know if Austin, correct me if I'm wrong, but there's like kind of that threshold. If it's like, I think a couple $100, it definitely needs to be reported to the IRS in this case, correct?
Yeah, so there's a $600 threshold where you're actually going to receive a 1099 Misc from your exchange.
That's what it is, exactly.
Yeah, will get the form. That's nice from a taxpayer perspective because it just shows you the number and you can go and plug that number into TurboTax. If you're below that threshold, it's still reportable from the IRS's perspective. Yeah. It's just more the burden is on you to go figure out what that number is. So there's a little bit involved.
That's right. Yeah, I think I got that from Celsius and some of the other major yield generating platforms. Cool. So on that point, I want to dive into tax now. So we got a really good kind of bird's eye overview. You did a great job, Austin, of explaining it, of the tax environment when it comes to crypto. How does TaxBit help in this case? So the idea is that you can effectively be able to plug in all of your exchanges, wallets, yield generating platforms, staking services, everything into this application, even NFTs, so you can get that full bird's eye overview. And I think people don't understand the importance of that because it can effectively help you realize that you may even have a lower tax obligation if you get a full understanding of your cost basis or all the transactions that you've engaged in. Am I correct on that?
Yeah, so yes, exactly. The IRS has been pretty explicit lately on kind of cost basis assignment methods. And they allow, one of the good things to us as crypto users is they allow what's called specific identification. They allow taxpayers to pick and choose which lots they're disposing of. And so using software, we can do that algorithmically on behalf of crypto users according to your preferences. What are my goals this year? Is it to minimize what I owe? Well, 99% of people, that is the goal. And so we can optimize by selecting lots that have high cost basis or long holding periods. So that way it's reducing your tax impact at the bottom line. And so what you're seeing though is the requirement to do this exchange by exchange exists. And so being able to, in the future, and we're going to get into this later in this show, you're actually going to receive a form, a 1099 from your exchange that does this for you. We are finally growing up as an industry, just like the equity world, where that is going to be handed to you and your life is so much easier. Long awaited has come the day. And so really though, in the meantime, being able to do that all from one holistic platform where you can connect your wallets, your centralized sources, your decentralized sources, all of that comes in. And now you can see side by side, platform by platform or source by source, what it is and what are the lots coming in and coming out and what's the taxable activity across each of your sources, and then have forms right there at a click of a button that are just prepared for you.
Very cool, man. Yeah, I think you're right. Like again, using like Robinhood or any kind of brokerage platform, it's standard in the brokerage world. It's by law was required, and I think now as of 2021, companies are required to do that now. That the IRS like finally established, or 2022.
So it was actually passed with the infrastructure bill. So it goes into effect 2023. And so there's already a lot of brokerages, though, that are doing it proactively because, hey, our users have been asking for this for years. It's been a little bit gray area. We're just going to do this, for the user's benefit, if anything. Some platforms, not even necessarily filing anything with the IRS, but handing users what they need. And TaxBit is predominantly kind of the power behind that technology for the majority of kind of these brokerages.
Absolutely, man. One thing I wanted to hit on, and this is again where like the beauty of a platform like TaxBit can come in. Your guys' job at the end of the day is to do two things. One, to help people pay their proper amount of taxes, but at the same time, ask a very important question. How do we make sure legally, in this case, we're able to pay the right amount of taxes? And the problem that many people don't think about is think, oh, God, I'm paying taxes. But on top of that, a lot of people don't consider that, hey, like, how can I best optimize my taxes in this case, as you mentioned, through the accounting method, but most importantly, being able to realize losses. And this is an area where people miss big time. So again, correct me if I'm wrong, but I want to kind of explain this because this is something that I came to really appreciate. During bulls and bear markets, or even during the different phases of the market, we have winning trades and losing trades. The one important thing that most people don't think about is that if you have losing trades, you need to realize those and you need to communicate that on that tax year. Because if you can communicate that, that will not only realize those losses, but on top of that, it will effectively remove the obligations you have to pay on taxes in a sense, or your overall gain because you're factoring for those losses. Am I correct in that, Austin?
You're right on. And I'm so glad you emphasized this because this is one of the greatest wealth hacks that most high net worth individuals deploy. But for whatever reason, technology and knowledge hasn't been democratized to everyday people like us who, need to take advantage of this. And that is you harvest those losses, those dips, and then you repurchase your position or, a similar position, depending on what asset it is. This isn't just crypto specific, but this is widely done for equities as well. And Betterment and Wealthfront pioneered, algorithmic trading that incorporates this type of thing. And TaxBit has gone and said, no, we're just going to democratize all of this to the end user, put the power in your hands. And so if you go within TaxBit's consumer product or even on your broker accounts, the TaxBit's power, you're going to see the tax tab and showing you all of your lots that you have not yet realized and what are the positions of those lots. And now if you're seeing red or you're down in the low, that, of course, is a bad thing. We always want to make money, but it's not the worst thing. It's only the worst thing if you keep holding it there and don't take advantage of the tax impact of what you can do. You can sell, you can dispose of, and then that red loss goes to you personally and to lower your taxes, increase your tax refund in a lot of cases. And then you can then re-enter your position. There's this concept of the wash sale rule, which applies very specifically to securities changes right now. We believe it will apply to property or crypto in the future. But even when it does, there's still correlated assets that you can go back into, hold, and now you're still maintaining exposure and appreciating wealth over the long term in the underlying asset class while getting this tax impact to you immediately.
Yeah. So to simplify it in that case, Austin, and building your point, like basically, let's say I bought in at 10,000, I bought Bitcoin at $10,000, it goes down to 5,000. I can sell the position, realizing that loss, and I can really re-enter right back into that same position and basically materialize that loss. And that can basically help to lower effectively my obligations for that tax season. And of course, now if I eventually sell that at 10,000 or 20,000 in the future, and I realize those gains, then of course I'm going to owe taxes for that tax season.
Yep. Yeah, that's right. At the end of the day, years down the road, when you're all out of your positions, it all washes. But money today is better than money tomorrow is kind of finance 101, because you can use that wealth to optimize your life and your other assets right now as opposed to later. And so, yes, being able to take advantage of those market dips is, I think, of great importance.
Very cool.
In crypto.
Yeah, no, I wanted to actually get on a point you were talking about, which you were thinking about the forward-looking future, about how regulation is going to look around taxes. Just for a quick pitch, because I understand, Austin, I know you're knee deep in it and stuff, but like a bird's eye level view, what are your thoughts on like maybe US regulation around crypto taxes? Europe, I know you might have to maintain a bit neutral, but just curious, like what are your thoughts on where that outlook is going?
Yeah, so let's start with Europe, actually. There's this organization called the OECD. It consists of a lot of member countries, dozens, predominantly based in Europe, that come together on joint reporting standards. And they've done this for other asset types, such as equities and commodities and bonds. And actually, last week, they just published their first draft and proposal. It's going to be open for comment period here soon, that shortly, we expect to be enacted, rules around crypto and digital assets. And it's long and boring. It's hundreds of pages long. But essentially what it is saying is what I, started the meeting saying, and that is brokerages are going to have the responsibility to provide their users with information that helps them file their tax returns, as well as provide such information to regulatory authorities. And so this is how it has worked in traditional asset classes as well. But now you've got all this big group of countries where it's like, yes, hey, we can't put the burden all on our users to go and use their own software, their own accountants, their own Excel spreadsheets. That's not how other industries work. Usually your exchanges, your brokers, your middleman are giving you the forms that you need in the info. So it's as easy as you reporting the numbers on such forms into software over to your accountant. Well, that's the migration that is happening both in the United States as well as internationally, led by the OECD. Really is the first one to get kind of their full set of proposed guidance out. The IRS is expected to as well this year. And so we're going to see a lot more help to the end users from these exchanges.
Yeah, that sounds like a generally like net positive, that at least there's a standardization across the world around how the world views it. And as you mentioned, that uniformity around it being seen as generally property when we're talking about like the broader asset labels that you could fit crypto in. I remember just 2 or 3 years ago, you had the head of the CFTC saying that it was a digital commodity. You had the SEC saying most cryptos are securities, like people going back and forth about what the definition was. But now I think there's that standardization that's going to make it not only like easier for end users to understand what the obligations are, but as you mentioned, putting per se a lot of the responsibility on the exchanges and brokers to make it as simple as possible for those users to report it. So it seems like a positive net transition. I mean, compared to, Austin, I remember when we were chatting like back a couple of years ago about how bad it was in the sense of people actually like possibly like properly reporting things,
So hard. It's gotten better. Technology such as ours have gotten a lot better, but nothing is better than opening your mobile app on whatever account you already are using and now seeing a whole user experience right there and getting your forms at a click of a button. So that's what's coming. It already exists on a lot of exchange accounts. So we're excited about that, but it's going to exist worldwide, I think, more ubiquitously.
Very cool, Austin. I guess to close things off here, I know we've gone on long enough talking about taxes. I wanted to give maybe people an ability to understand about how they could start to access TaxBit. And you mentioned something earlier, which I think is just overall on a business model standpoint, I think is phenomenal for TaxBit and also for the user, which is that you guys are working and partnering with a variety of exchanges and platforms. And you have this TaxBit network that will allow a lot of people to generate their funds. I would say most users in crypto likely have one or two platforms. So in this case, how would you recommend they go about signing up to TaxBit and taking advantage of that TaxBit network? And maybe if they're more of a power user, someone who's really active in DeFi NFTs, where would they go to?
Yeah, so just go to taxbit.com. You can create a free account, no credit card required. And yes, you're right on, Nicholas. For the majority of people, you're going to be able to just go and link up all your stuff. Everyone can link up all their stuff, regardless if it's in the network or out of the network for free. Right. Majority of people are going to be covered by the 30 plus platforms that we support and that really are leaning in proactively on your behalf to kind of make this all possible. And so, yeah, for your more power users, if you're using decentralized finance and NFT world, we do recommend kind of upgrading to more of a paid account plan for a couple of reasons. One, you're going to get human support that, we're second to none. It's live chat around the clock, and they're going to be able to help you and guide you through kind of the novelties of what your use cases are. Second is we also have some of these NFT and DeFi suites that are going to pull in all of your NFTs. It's going to show you what you previously owned, the characteristics of that, what your cost basis was, what your disposal value was. Being able to manage all of that in one place is a big value add. But lastly, and this is, I think, applicable to anyone, even if you're just using one exchange that is covered by the network, a lot of users want the tax optimization module. And that's back to what we were saying, Nick, before, where that's going to show you real time. You're able to log in whenever you want throughout the year. Now it's not about filing your taxes. It's about proactively planning for 2022 and making optimized trades and forecasting. That's going to show you, hey, if I go to this exchange and dispose of this as of this point in time, my tax impact will be this. If I do it over here with this asset, it will be this. So it's running through all the what if scenarios for you. And what we're finding is, I don't know what it cost, $150 a year or whatever, is greatly offset by the immense
savings. Yeah. No, exactly. I think that's the thing to think about here with like the plans. It's like with most services, like if you sign up for a newsletter or something, the value you can get from it exacerbates the cost. And I think on that point, Austin, just one of the things I wanted to share with you guys, if you guys want to get 10% off of any of the plans to TaxBit, we've got a link down below in the description. It helps to support the channel, but on top of that as well, we'll help you guys get discounts on that. If many of you out there, I could assume also as well, I made a wrong assumption. I bet many of you are also power users like me, as many of you like DeFi, and maybe you guys are even beyond me and stuff in regards to the NFT world. That's far beyond me still.
You want to know what's fun, Nick, is we've now done this with the Data Dash community. This is the 4th year. It's been awesome to see just the same, faces and names come through. And we've really built kind of a strong relationship and community with the Data Dash community, which has been really cool to see. So we appreciate all the Data Dashers out there and the support.
Yeah, no, I honestly, from people in the Dash Report discussion group, from people in the comments, I mean, nothing but positive things. And as you mentioned, Austin, something that I hold dear to heart and stuff, especially when it comes to money or finance, is customer support. I can advocate for that, guys. The TaxBit's customer support is second to none, as Austin hinted at. And that is so rare in the crypto space. So rare. I get very heated about that topic and stuff. It come back to it feels incredibly satisfying when the customer support hits right, and it also is incredibly infuriating when it goes bad. So Austin, so happy for you guys and stuff, what you guys are doing on a really positive note. So excited for how the company's been expanding and how you guys have continued to adapt in this crazy environment with establishing regulations and all the while maintaining a consistent, good user experience on the platform. So thank you so much for making the time, man. It was so great to catch up, and we'll have to have you back on here soon after the tax season.
Great to be here, Nick, and already excited for next year in 2023. It's going to be a great year in 2022. So wishing everyone the best of health and wellness, and have a great year.
Absolutely, Austin. Take care, man.